Good morning, all. Welcome to the morning kappa at 8 on a Wednesday. I'm here to present the Midweek Futures Traders Technical Brief, and we are on week 4, October 2025. So here we have the most popular products traded by traders. And from this table, we can see that there are some transitions in markets from what we have seen a very high momentum activity to maybe a more neutral one for most of the products we are covering here. So notably, we have seen that the indices in US has been trading mostly on a neutral setup. And from observations, we noticed that it's been bouncing around the recent highs and retracing to certain supports which have provided the market with buying opportunities. And therefore, we see that this pattern will continue, and the trend that is to be expected will still be considered neutral. Nikkei is interesting because it has come from a very neutral situation to become positive, and this is all due to the newly elected lady Prime Minister Sane Takeishi, and the markets are looking positive to embrace her policies. And for metals, we have seen gold having a massive run, which has also impacted silver prices. But in the recent performance, especially from last evening, we can see that this momentum may have been overdone or overbought in a sense, and therefore is drawing back prices to a more neutral situation, and reverting to mean is the way to go for markets, and anything that goes up must come down, and anything goes down must come up. So that is the view on metals. And we have got agris. Agris also looking a bit more stable after a very bearish run. Corn, soybean oil, and soybean oil to neutral after very negative implications. But I believe that from the neutral situation, we probably can see some trading activities which are again, around ranges which we see to be supportive, and also having a resistance which is very forbearing. So for local products, we have also noticed that palm oil, after a rebound from a low of around the 4250 level, it is now consolidating around the 4003 to 4004 level. And basically, for palm oil, the news is that Indian palm oil demand is anticipated to decline following its Diwali festival peak this month, and may potentially apply downward price pressure as the market traded sideways, with investors awaiting developments on possible US and China trade negotiations. So in a sense, we are looking for dips to buy for palm oil. And for agris, the harvesting season is ongoing, and we can see that the US temperatures are favorable, especially in the Midwest part of the US. Basically, most of the temperatures are near normal, and there is no severe heat, neither heavy rainfalls, and therefore has been encouraging harvest to progress in a very efficient way. And so therefore, we have this today, the product that we are focusing on for our market guide, which is actually the corn, and this is the December contract. Basically, the situation is that grain traders and analysts are still unsure of what crop yields looks like as harvesting hits full speed in the Corn Belt. CFTC and USDA reports are still not available due to the US government shutdown, and the traders are behaving in a manner of little concern with harvesting almost completed. So for market guide, we, as mentioned, existing profile is neutral. So the short-term setup is a negative due to the fact that prices have rebounded, and current price is at 419.6, and our reference price is 421, and the potential profit price if the reference price is hit is at 415, and giving us a value of USD 300 US dollar, and the potential loss price is above the 425, giving a loss of a USD 200 US dollar. And the other one that I have picked out is the micro Nasdaq, and in a broader way, one of the US indices. So we have seen that US stocks have remained very elevated, with finance and technology shares providing much of the upside muscle, and upbeat quarterly earnings results also revive risk appetite, and also investors have grew less fearful about regional bank credit quality. However, we have also noticed that the current situation is that markets will continue to trade in a neutral way after a slew of merger and also acquisition news which has happened in the past 1 week plus, and all AI related. So we feel that prices may have run its course during this short term, and therefore we are looking for a potential downside whereby we look at the micro Nasdaq, whereby the profile, as shown just now, is neutral. But for short-term setup, again, we see that, it may have hit a resistance. Current price is 25255. And, if there is downward pressure, we believe that the breaking of the 25170 would see that prices will go down further. And this would give us a potential profit price at 24900, and the USD value for this move will be 540, and potential loss price, which is above the 25320, which will give us a potential loss value at 300 US dollar. So this is all from me today. I'll pass on to Joseph. Over to you, Joseph.
Right. Okay. Thanks, Vincent, on the midweek futures update. So looking at the Hang Seng Index, nothing much change. We just keep the bullish bias on the index with 25,000 point as our stop loss point. So over here, we just try to looking at a bird's eye view, right, on the overall Hong Kong market. So the setup here is that I'm looking at price to volume over a week. So I try to capture those stocks that actually have attracted strong trading volume. So the bigger the box is, there's more volume being traded. As you can see that yesterday, the pop mark has actually went down by 9%, and Xiaomi have from positive become negative, and SMIC rebound by 3%. So overall, the sentiment remains neutral in the Hong Kong market, as the market is waiting for more clue what's the economic projections from this 15-5 5-year plan, the 15 5-year plan from the China, that the meeting is still taking place right now. It's going to end at tomorrow, Thursday, right? And but in the meantime, right, if we're looking at the medium or smaller boxes, you do see that the small mid cap actually have a rebound in a stronger way, especially in the EV and also the insurance and banking sector, right? And as such, this morning I'll be looking at two Hong Kong stocks. Firstly, 669 Tectronic Industries, which have jumped above the 21 days moving average and break past this 95 Hong Kong dollar. So on the upside, resistance will be 103 and followed by 113. Downside support is 89. China Life Insurance 2628 also break past the resistance at 24 Hong Kong dollar. Can see that recent runs up. Share price has been moving upwards with a rising volume, showing that the positive momentum is gaining pace right now. So we do believe that China Life potentially will test next resistance at 26, followed by 28. Now, so support is at 22. So one auto sector counter, and then one the insurance counter, right? And yesterday we do mention that this week the IEA have released their view that they do see a 2026 oil market will have a surplus in their supply, and the oil price have actually went down to below 60. I'm looking at the US WTI, and yesterday night gold have uh, went below 4,002. So far we still keep a bearish bias on the oil and the positive bias on the gold, right? And as for the US market, this week is the result season, and now yesterday we do see that the initially, tech stock sentiment was positive, and at the closing, Texas Instrument have guided a challenging Q4, and the stocks have actually experienced selling pressure after the market close. Nevertheless, two stocks that we have been following, i.e., the Ford F and also General Motors, have delivered above expectation results, and furthermore, This General Motor have given better guidance on the Q4, and the share price have went up by 14%. Now over here, I just want to share with you that if GM have a better result, I do expect that the Ford will give a similar result as well. Yesterday night, if you follow our US commentary, I do mention to you that one counter is actually Coca-Cola here, KO, that went up by 5%. Now, 2 weeks ago, we had a technical report on Coca-Cola. One reason is that the peers, Pepsi, have actually delivered above expectation results as well. So, looking at the peers, right, I think that the Coca-Cola should have a better result, or if not, a neutral result. And true enough, yesterday, the result have been better, and the share price have actually gapped out. So similar idea that we can actually adopt on the Ford. And also this week, right, US have a lot of earnings result they are actually going to release, and due to this release result, the timing gap, right, we can actually look at some of the trading opportunities across the market. So yesterday, the Texas Instruments have TI have actually went down. Next, we'll be looking at will be Lam Research, and followed by this week the Intel. Speaking about Intel, right, I think one of the peers that I'll be looking at is actually AMD, right? You can see that last 1 week, the fund flow seemingly moving out from Nvidia and actually going to a a cheaper alternative, which is the AMD, right? So I'll be watching closely on the AMD this 1-2 weeks. Okay, and as for Malaysia market, nothing changed. I will still keep a bullish bias on the FKLI. We've stopped at 1535, and FCPO are still consolidating yesterday. Right, 4006 resistance remains intact. Stay bearish on the FCPO until we see a breakout on the 4006. As for Malaysia market, sentiment also quite bullish yesterday. We do see that the consumer stocks actually went up yesterday, and due to the yesterday tech earnings from the US, I do think that this morning tech stock will see a bit of selling pressure. If that happens, funds may actually rotate out from the tech stock and actually moving out to another sector, likelihood to be either consumer or consumptions, or the property sectors. Okay, so just watch out how the funds move this morning. And as for Malaysia trading stocks, firstly, we will be looking at MFLA, Malayan Flour Mills, which break past the 60 cents resistance. Trading volume have been rising as well. So after breakout, MFLA may be testing 63, followed by 66 cents resistance. Downside support is at 57 cents and half. Secondly, we have KSL break past the 3 ringgit resistance on the back of high volume. Riding on this renewed momentum, KSL will be testing 3 ringgit 40 cents and followed by 3 ringgit 80 cents. Downside support is 2 ringgit and 75 cents. So we have two breakout stocks, MFLA followed by KSL. So I'll stop here and pass the stage to Nabil on the bank sector report. Thank you.
Yeah, thanks very much, Joseph. Hi everyone, good morning. So the report that I have for this morning is one on the banking sector. We are turning a bit more bullish on the sector. We upgrade our call to a overweight from neutral. I'm sure you heard from my colleague David yesterday on the upgrade to public bank, and this upgrade to our sector call follows on from there. I think for the remainder of 2025, we are not expecting much earnings excitement from the banks, but we do think that investors will be willing to look past that onto 2026, where we expect sector net profit growth to rebound to plus 5% versus this year's plus 2%. I think fundamentally the sector still looks sound. Domestic economy is still resilient, and due to the timing impact from the OPR cut back in July, I think first half of next year should start off strong with the repricing of domestic deposits. So NIM pressure should ease, net interest income should grow stronger. We've also assumed stable credit cost for 2026 versus the high or the uptick in credit costs expected for this year. So that helps with the earnings growth figure as well. And lastly, on valuations, the sector trades at a pretty decent level of 1.1 times price to book, while its dividend yield is also quite attractive at 5.8% for 2026. We see two major investment themes for 2026. The first being an overall lower interest rate regime in Malaysia as well as regionally. This particularly benefits the regional banks, i.e. banks with presence in Singapore and Indo. We think the repricing of deposits should be felt stronger in those countries, and the potential beneficiaries there would include Maybank and CIMB. And also, especially in countries like Indonesia, a significantly lower interest rate environment is positive for loan demand, deposits or CASA deposits growth, wealth management, as well as to a smaller extent asset quality. And the second theme that we see for next year is on capital management, where some of the banks under the standardized approach to capital calculations should be adopting new capital framework from the PNM. And this should see the banks unlocking excess capital that can be returned back to shareholders. So to play this theme, Horng and Public Bank are our key picks. And I think unexplicit number 3 theme is the return of foreign investors into Malaysia. This is going to be a bit harder to predict and can be, hot money in and out very quickly. But the banks that we think can benefit from this foreign inflow would be CIMB and Public Bank, given how much their foreign shareholding levels have fallen over the past year. As part of this report, also we include some highlights from PNM's financial stability review that was conducted last Friday. So at the briefing, I think two main takeaways that we wish to highlight. Number one, PNM has proposed to transition away from the CLIBOR for benchmark pricing onto the Malaysia overnight rate and also the Malaysia Islamic overnight rate. So this transition process will take 4 to 5 years, and the CLIBOR will be ceased completely by 2029. So we think given the long runway to CLIBOR cessation, we think there will be quite minimal impact to the banks at this juncture. The second thing to highlight from the review briefing is that as for the new capital framework for banks under the internal ratings-based approach to capital calculations, for example, CIMB, Maybank, RHB, and AM, the Bank Negara is expecting a aggregate neutral impact to capital. This is nice to know, given that we had initially expected some slight negative impact. But at the end of the day, our base case wasn't for any of the IRB banks to be cutting back on its dividend payout ratios in the first place. So this is just a nice to know. Again, at the end of the day, we upgrade our sector call to overweight from neutral. We've rechecked our list of top picks. Our preferred pick now for the sector is CIMB for the reasons that I mentioned. Number 2 would be Horng, and number 3 is Public Bank. So that is all from me. Pass on the floor to Meng, who is our final speaker. Thanks.
All right, let me move on to this company update report on Solarvest. I think yesterday they announced that they are proposing a 10% private placements, potentially raise up to 254 million based on an illustrative price of 3 ringgit per share. The target completions for this exercise is within first half of 2026. FY26, subject to regulatory approvals. Now, the proceeds are mainly to fund its business expansion as well as strengthening its balance sheets. About 50% of the funds will be allocated for the capex, mainly for the new solar PV projects, LSS5, LSS5 Plus, as well as the recent announcements on the Muka project in Sarawak. About 20%, about 50 million, is going to use to repay its borrowing of, medium-term notes, while, about 80 million will be set aside to fund the working capital for its, EPCC order book of about 1.2 billion and growing. Now, in terms of, the impact to the financial as well as capital structure, I think the share caps, is likely to increase about, 570 million from 316 million currently. On a pro forma basis, net asset per share could improve to about 77 per share, whereas the gearing should decline sharply to about 0.38 times from about 0.7 times right now. Now, just to note that the group has also about 59 million of outstanding ESOS options, in which 23 million of the ESOS options have vested as of yesterday. I think this exercise will reduce the leverage and strengthen its equity base, which will enable Solarvest to pursue larger scale projects as well as expand its renewable energy portfolio. Now, in terms of the numbers, I think we incorporated the entire placement exercise with the proceeds used to pay out the loans and resulting in savings or interest costs. Hence, our earnings are raised by about 4 to 9% for the next 3 years. We also took the opportunity to lower the entire borrowing cost assumptions for some of the projects as well as the holding company level, and raise the target PE multiple for the associate level investment and solar assets earnings. It was at about 15 times that we pegged to. Right now, we raise it up to 20 times for the associate earnings. Now, after accounting for the enlarged share base, from both the private placement as well as the ESOS, our target price is marginally lower to about 3.49. It was 3.58. This includes an 8% ESG premium, as the scoring for the ESG is above the country median. We maintain buying the stocks at a new target price of 3.49. And I think that's all from us this morning. Thank you for joining us, and we hope to see you again tomorrow.